Hello friends, this is Dr. Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. This is my privilege that I am here with you to talk about Introduction to Accounting. So, in this half we are going to talk what accounting is, what are the objectives of accounting, who are the users of accounting information. So, that would be my primary agenda for the next few minutes. So, I hope that you will remain with me. Thank you in advance. So, friends, what is accounting? So, accounting has to do with business transactions. In the past, we have talked about what business transactions are. So, if a business is being carried by somebody, there are so many transactions which are taking place, be it in terms of sales, purchase, payment of payment for assets, payment to different suppliers, payment to employees, payment of taxation to government, so many more things, buying of something, taking the supply, taking care of supply chain management, taking care of marketing, taking care of advertising. So, these all are the events which are happening in a business. Okay. So, all those events, all those transactions which can be measured in monetary terms, we record them with the purpose of calculating the outcome of those transactions or that economic activity. So, that is what accounting is all about, identifying those transactions which are taking place, then measuring them in terms of monetary value, and then communicating that value or values to those who are interested in the information which is generated through this process. So, to define it, what accounting is a process of identifying, measuring and communicating useful economic information to permit informed judgment and decisions by users of the information. This is what is been defined by CIMA. Another way to define accounting is that it's an art of recording, classifying and summarizing in a very significant manner and in terms of money, transactions and events which are at least in part of financial character, and then thereby after this interpreting the results thereof. So, we define accounting as an art. So, what kind of art it is? The first step in that art is that we record whatever has happened during the last quarter, last month, last year. So, the final records are for a year, but companies keep on recording on daily basis. So, whatever has happened in the past, that is recorded, and then we group them. Classifying means grouping the information. So, for example, there could be 1000 transactions in a day pertaining to sales. There could be 10 transactions pertaining to purchase. So, I will group all the sales transaction as one class, and I will group all the purchase transaction as another class or category, right. So, that is what classifying is. So, similar nature transactions are kept at one place under one heading, sales. So, that leads to making account, sales account, purchase account, inventory account or asset account, like that. And then we summarize it in a way that this information makes some sense to the users, be it management, be it shareholders, be it prospective shareholders. So that's what accounting is. So, but the bottom line, the underline is this, that we do not record any transaction which does not have a financial character in it, which cannot be measured in monetary term. So, only those transactions will be recorded and then would be classified and would be put in the process of accounting if they are having some economic value in it, means they have some monetary units to be, they can be equated in some monetary unit. Now, if I define or if I explain accounting as a process, so why do we call accounting as a process? Because in any process we put some input, right, and then we have an output. You take an example of production, you take making chapati at home. It is also a process. We make dough, we put we put raw chapati, or we roll that dough into round shape or any shape, and we put it on the tawa or the pan, right, and then end product is the chapati, the roti itself, which we call as roti in India, or the bread in English. So the input was that dough which we made with any flour, and then output is that bread. So same way in accounting, we have certain input which we process to get some output. What is the output in accounting? In accounting, output is the accounting information, right, that economic data which we generate through the process of accounting, right. So we generate accounting information or economic data through the process of accounting, and by putting what into raw material? By putting those business transactions as raw material, right. So for accounting, the raw material is business transactions, be it sale of 1000 products or 1 lakh products, be it purchase, be it generating creditors, or paying to or receiving money from debtors, or paying to creditors, paying for purchase of plant or machinery, or any such thing, or salaries or rent or insurance, or any such thing. So we are identifying and measuring and communicating economic information through the process, so that those people who are getting that economic information, that accounting information, they are able to make decisions. So we are helping them to make informed judgment. That's what accounting is. Okay. So what are the functions of accounting? So there are primarily 5 functions which we carry in this whole process of accounting. The first one is recording, then classifying, summarizing, interpreting and communicating. So what is recording? Whenever a transaction takes place, we put them in the book name journal. You see the corresponding to the function, I have kept, or I have written name of the book. So the recording is basically to record. To record means to write down, either or record manually, or to record on a computer, on a system, or on a software, right. So putting it in the record of the books of accounts of the business, right, and this is done in the book name journal. That is the first and the foremost step in the process of accounting. Then we classify as I said, we group, and the grouping is done in the ledger. So ledgers are created, separate ledgers could be created. For example, there could be a ledger for the dean students welfare of a university. There could be separate ledger for creditors. There could be separate ledger for debtors. There could be separate ledger for taxation in any business. So we are grouping the transactions which are business transactions which we recorded. From recording, from journal to the next book which we are knowing, or which we take as ledger, we are taking those transactions by under groups, and that is what classifying is. And then after that, the next step in the accounting process is summarizing. So how do we summarize? We summarize it in the book name trial balance. Summary is that every account which is been opened in the ledger, we balance it. Balance means I differentiate the receipts and the expense, or debit and the credit side of that account. Either of the two side would be higher, right? Either debit is higher or the credit is higher. So we write the difference in the side which is lower, but we know the balance of that account by the side which is higher. So if I say furniture has debit balance of 2 lakhs, means the debit side of that account is higher than the credit side. So that summary of different accounts, so we do not write all the transactions. For example, I may have purchased raw material 1000 times in a year. I am not going to write those 1000 transactions in trial balance. I will write only the balance, the end amount in my, the amount which I have in hand of the raw material, so in that trial balance. that's what basically the summary is. So, that's why we call it as summarizing. The function is summarizing, and the book where we do this is trial balance. The fourth function is interpreting, and the interpretation is being done in the books named as financial statements. So, interpreting means trying to draw some meaning. So, financial statements helps us know either we made profit or we made loss in the year, in those last 12 months. What is the value of assets, what is the value of liabilities, what is the value of equity, etc., etc., on a particular date. So, we are trying to interpret now. So, this is the next step after summarizing in trial balance. And lastly, we do the function of communicating. Communicating what? The communication of business transaction, communication of decisions or the data which we generated out of this process, so that people could have good decisions in their life, in their business functions. And that function is done by publishing the statement on the website. If it is a public sector company, the balance sheet and the financials, all financial statement of profit and loss, they are published online, they are published on website, they are available on many platforms. If it is a private company, then need not to be published to the general public, but they are available, they would be available in the office of the company, right. So, these are the functions of accounting. Now, I want to talk about objectives of accounting. So, they are, as I said, when I am using the term accounting, primarily I am referring to financial accounting. So, accounting and financial accounting, these two terms are used interchangeably. So, one person may use the word accounting and another person may use the term financial accounting. They both are referring to the same branch of accounting, because we have many more branches of accounting. We have management accounting, cost accounting, there is corporate accounting, there are so many types of accounting we have. So, when we use the word only accounting, it means we are talking about financial accounting, which helps us generate financial statements. Okay. So, now I am going to discuss objectives of financial accounting. So, there are a couple of objectives for which we carry the process of financial accounting. Number one, to keep systematic records. Number two, to protect business assets. Number three, to ascertain the operational results. Number four, to ascertain the financial position. Number five, to ascertain the cash position. Number six, to facilitate the informed decision making. Now, I am going to discuss these objectives one by one. The first number, as I said, is to keep systematic record. Had it been a small business, only 2-3 transactions in a day or maybe in a month are happening, then one need not to keep records. It means one need not to keep books, need not to record on a system, etc. One may have good memory to remember that, those many transactions, 2-3 transactions a month or a year even. But the fact of the matter is, most of the businesses would have hundreds, thousands, millions of transactions, varying upon the size of the business, and for that matter, accounting helps us to keep record systematically of those transactions, right. So, every day transactions are recorded in the books, in the system of a business. So, that is the first objective, to keep systematic record. Whenever even 2 years after now, if I want to see something what happened 2 years before, I shall be able to look at, because I have all the records. After 10 months from now, let's say in what happened in January, I want to see, I am sitting in November today, right. I want to see what happened in January to my purchase, to my sales of 10 different products. I can refer to my records and can find out that what happened. So, that's how we can do, because we are keeping systematic records, and that is the first objective of financial accounting. The second objective is to protect business assets. So, since we keep record of assets, liabilities, and we have the summary of assets on a particular day. So, we can protect. I know that I have inventory of 10 lakhs rupees on 30th of November. I will be able to take care that this inventory has been sold in December or it has been utilized in production. So, I am going to take care of the assets, be it current assets or the long term assets, be it every company will have asset register. Asset register is the detail of the non current assets any business possess, right. Companies have store ledgers, ledgers define the amount of stock we have for raw materials or different spares, etc., etc. So, this process of keeping the records helps us to utilize those assets carefully, judicially, and also to ensure that we do not lose those assets in any under any pressure or in any or there is no any misuse of those assets. The another objective is that we want to ascertain the operational result. When I say operational result, which it means both profit or loss for a business, right. So, business may get profit out of the business transactions or the results, and may get loss as well. So, how do we ascertain? By comparing revenue of one year with the expenses of the same year, same 12 month, it could be same quarter as well, same month as well, right. So, by comparing revenue of the same time period with the expenses of the same time period, we can find out the profit and loss for the business, and that is what the operational results are. Next is to ascertain the financial position. That financial position is actually about the assets, liabilities, equity, etc. And financial position can be ascertained by preparing balance sheet of a company, and this is the end result, that statement of profit and loss is prepared and which tells us the operational result, and balance sheet is prepared which tells us the value of assets and liabilities and equity on a particular date. Then we have to ascertain the cash position, which is also very important. Other than the profit and loss, other than the assets value, the cash is something which decides the liquidity of a company. How good I am in when it comes to liquidity can be ascertained from the cash position. And how do we prepare cash position? So, we prepare cash flow statement, and that tells us that where did I spend my cash in the last 12 months if I prepared the cash flow for 12 months, and what is the main source, either I got the cash from business operations or by selling the assets so that is investment activity, or from the financing activity, that business may generate cash by issuing share, right. Business may or can get cash by selling building. Business can get cash by selling products as well. All three examples are giving you that business is getting cash. The last one is regular operations, selling the product. The second one was by investing, that I invested in somebody's that I have invested in some building and which I sold now and I got money. So, that cash inflow, that cash which is coming to business is the outcome of investment activity. Another example was issuing shares, right. Cash is also flowing in because of the issue of share, but that is something to be paid in future, that is an obligation, that I am getting some preference share, I am issuing debentures and I need to pay back, right. All the three activities are generating cash, but they are to be taken in the three different categories, and that is what we get to know through cash flow statement, right. So, that is also one of the important financial statement, and so the financial accounting helps us generate financial cash flow statement as well. And the last objective is that it helps us to facilitate the informed decision making. People are able to take decisions well because they have some numbers to refer to, they have some data, they have some information which has credentials, and the decisions are bound to be effective because they are based on certain numbers, they are based on certain reliable information. So, these were the objectives of financial accounting. Now, I would like to talk about the users of accounting information. That would be the last thing I would like to talk now. So, there are many users of accounting information which is generated as an outcome of financial accounting. The first user is management itself, second is investors, the third are creditors, fourth are employees, then the last is basically SEBI or any government institution or income tax department. So, how do they help us and why do we generate information for them and how do we help them with the accounting information? So, first of all, management. Management is what? Management is managing business activities, right? That is what the management does in any business. So, they do planning, they do direct people, they do coordinate, they do motivate, they do control exercise, right? These all are managerial functions, planning, coordination, staffing, etc., etc. So, how does accounting information help any company to manage well or to carry the management function, all the functions. For example, if I have to do staffing, staffing means that is also one of the management function. Staffing means hiring people. Why would I like to hire if I am not having the need for laborers or need for people? And how would I get the need is there or not? Basis on the projected sales, basis on the demand I received from the HR department. How would HR recommend to recruit people? Because some department raised requirement for of people. What justification would they have given? The department would have given. They are showing that their revenue is rising, the product demand is going on or rising, or somebody has already left. That is why I need to recruit more people. Where does this information comes from? That this was the cost of labor in the past. I have spent this much money, I have spent this much money on salaries, and I have generated this much revenue and I have these many margins. Now my sales are up, I need to recruit more people because I need to sell products to meet up that demand. So this was a justification given by some department which comes to the HR department. HR department plans staffing. So this is based on the numbers, right? The numbers which are the projected sales, the actual number of people and their actual salaries and the forecast as well, right? So this is how accounting helps us. We may carry an analysis that how much revenue generated per person in that department. So per person revenue generation, and then department may demand for more people basis on that, right. So this was one example of staffing. Motivation, if I have to give some bonus to my employees to motivate them for their performance, how would I do? I would refer to some numbers and that decision will be more effective. I can do random, okay, 2% hike of salary or 2% bonus to this department, 3% to this department or 2% across the company umbrella value. That is not done, right. I should be knowing that how much contribution of sales, revenue, growth of business is been done by each individual. Basis on that, I may decide the amount of bonus to be given or salary hike to be given. That would be more informed, right. So these are the just few examples. So for planning, I may need the previous year data, previous year sales, previous year production, previous year cost of material, previous year cost of labor, previous year cost of overheads, all is going to come from accounting data, right. So that is how accounting information helps management for decision making at various level of management. The second was investors, people who have already invested money in a business. They want to know either their money is safe or not, at what percentage their money is growing at, right? How much return are they going to get in terms of dividend, in terms of interest, if it is debenture. So, all this can be made, all this decision, all this information can be achieved, derived by investors by looking at financial statements. So, that is the second users and how this information helps them. The third is creditors, the people who have sold. We discuss what creditors are, who have sold or have rendered some service to the business and they are yet to be paid. They would like to see at the rate the business is growing, either business is making profit or loss, will their money get paid on time or not. Then employees, the people who have worked for the business, they want to know, they want to see that either my business where I am working in or the company I am working in is growing or not, do I have a good career with the company or not, do I need to look for other employment, etc., etc., by looking at the numbers given in financial statements. The lastly, SEBI or Income Tax Department, Institute of Chartered Accountant of India, corporate sector, they all are basically relying on the accounting information, right. So, these are the people who help us, who gets the information from accounting, and accounting helps them in many ways. So, these are the users. So, with this I would like to wind up, friends. I hope you could understand the objectives, the accounting information, the process of accounting. So, time to wind up. Thank you very much, friends. Thank you.